The bidding war of the decade seems to be escalating almost hour by hour. First, the prize, 21st Century Fox entertainment assets. Following the early morning news of Disney sweetening its bid for 21st Century Fox, there are new reports that the Mouse House might be close to U.S. antitrust approval on its bid for Fox's media assets. But sources are telling Fox Business, I would say late this afternoon, or before this show, but later this afternoon, that Comcast is set to counter with its $41 per share bid that could be a combination now of not just cash, but cash and stock. Will the new Comcast bid, if it does come, push Disney to then counter again, or will one of these media giants finally bend till it breaks and bow out, maybe look somewhere else for another offer to make? I want to bring in longtime media and entertainment industry analyst, CFRA senior equity analyst Tuna Amobi, who covers all three of these companies. And today, even as Fox A shares hit another record high, all-time high, you are lowering your call on this stock to a hold from a buy. First, tell me why.
Well, Liz, I think it's maybe the classic case of, kind of valuation, right? If you look at Fox shares, they're up almost 40% year to date, 46% since Disney's initial announcement. And the takeover premium that's embedded in Disney's counter offer today has to push the valuation multiples at an all-time high as far as this type of assets are concerned. So we look at that and we say, well, how much more can Fox afford to wait for perhaps a higher offer from Comcast when it seems clear to us that there's a clear preference by Fox for Disney's offer, also recognizing that Disney is already further along in terms of the regulatory process, and Comcast would have a much more uncertain regulatory review process. So all this put together, we think it's time at least to be a little bit more cautious, not to rule out the fact that Comcast may, in fact, make a counter offer, as you alluded to.
Well, OK, so we're saying they're up at bat for the next bid. Do you agree with that? And if so, when would you guess that Comcast comes out with its next offer?
I think it's probably a matter of days here. Perhaps, cash and stock offer, as you mentioned. We think Comcast, from a balance sheet perspective, is a little bit more constrained than Disney, which has the strongest balance sheet in the media space. That being said, I think there's also the tax consideration here that you have to remember. Disney's cash and stock offer, all things being equal, should be a little bit more tax advantaged for Fox shareholders. All cash offer, there's a lot more tax implications. And even if Comcast were to come up with stock, we think still that the Murdochs would probably be more inclined to go with Disney just based on the track record and Bob Iger's tenure. Yeah,
well, also, you got to be careful if you take on too much debt to be able to marry a company that you really want. You could lose credit rating. There are all kinds of issues for Comcast, correct? So in the end, who do you think steps away and says, I'm out?
Well, what we have now is a classic, bidding war.
Right.
I don't think either party is going to budge easy. But, the credit agencies, from a Disney perspective, I think they've articulated a plan to deleverage significantly, even if they were to take on, more debt on the cash part of the offer. In the case of Comcast, it's not that clear, especially given the already significant debt on the balance sheet. So on balance, all things being equal, I think probably Disney has an edge in this two-horse race, also considering the tax implications and all the potential culture issues that are involved in a massive integration like this.
Well, it's exciting for anybody who loves to watch mergers and acquisitions and loves to see these kinds of bidding wars. Tuna, good to see you. Thank you so much.